Good morning and welcome to Bazaar Morning Call. I'm Anuj, with me Prashant and Sonia. We are, of course, on the penultimate day of the monthly expiry, which normally is a big trend day. So let's see how things move. Globally, of course, things are looking a bit iffy. The dollar index that retreated. So in the evening, there was a hope that perhaps the bounce back will continue, but that sort of again retreated. But the big question is, has the dollar index made a double top? If that is the case, then emerging markets could still see a big rally from here on. On the other hand, of course, Brent crude is back above 100, so that could hurt sentiment, though there's FI buying, so that should balance it out. Both Nifty and Bank Nifty bounced right from that 20-day moving average that we spoke about as well yesterday. So let's see if that once again proves to be a bit of a support. Prashant, Sonia, hi, morning.
Hi, morning. Hi, morning, Prashant. Well, you know, for the market itself, I think the level perhaps to watch is the 20 DMA on the Nifty, which is 17,383, which is holding for now. Let's see which way it goes. But the market, the global market setup is indicating that today perhaps we could sort of gravitate towards that. Big fall seen in the Dow, the S&P 500 down for the third straight day. All eyes will be also on crude because Brent crude is now back at $100 a barrel. There's talks that perhaps Saudi Arabia is planning for an output cut. There's also the 3-day Jackson Hole meeting that kickstarts tomorrow. There's the Fed chair who will speak on Friday, reinforcing his commitment to battle inflation. So all of that is going to be tracked very closely. Now, for our own markets, as I said, this 20 DMA is holding for now. But let's see which way it goes. The dips are getting bought definitely. So yesterday, too, there was a sharp recovery from the lows of trade and 17,500 held. The macros could weigh in on the sentiment this morning, Anuj, but eventually, you know, the market is looking for opportunities to buy every dip, and it is it's corroborated by the fact that every time this market sells to below that 17,300 level, the dips are getting bought.
Yes, but Sonia, you know, the market is in a very interesting sort of phase globally. And I think that is a big question because the jury is still out on whether we were still in some kind of a bear market rally which has come to an end, or is the start of a bull market. Of course, those questions for later. We address the near term for now. The SGX Nifty indicating a gap down. Of course, not a big gap down, but 73, 74 points would still classify as some kind of a gap down. So what happens after that? Yesterday's close was strong. So in that sense, that means that the trend has still not turned negative yet. That changes if you start to trade below and close below yesterday's low. And yesterday's low, and you know, it almost worked like an algo trade. Right at the 20-day moving average, the market reversed. Now that average has moved up. So now that zone to watch is 17,345, which was yesterday's low, and 17,385, which is the 20-day moving average. So that's the zone which is sacrosanct. I think something closer to this, the bulls would attempt another recovery, even if that's not sustainable. My sense is it could sustain. The index to watch is the Bank Nifty because that's where you had a very strong bounce from its 20-day exponential moving average, and the close was at its 10-day exponential moving average. So in that sense, because it's the market leading indicator, if that turns, I think that will help the market because if the Bank Nifty starts to turn in green once again, after a gap down, of course, then shorts will have to cover. But let's see, it's so all over the place. Yesterday evening, for example, it looked like, you know, things were getting normal again. But then again, there was some bit of, you know, turn towards the end, Prashant.
Tricky, right? I mean, yeah. I think that much is very clear. It's become much more tricky. And maybe, just maybe, the clean one-way kind of move up that we've seen, that is perhaps now over, most likely. I mean, I think that's the only thing one can say conclusively. Now, where can the market, the Nifty get to? You'll have to look at very short-term levels, right? So the 2-day fall, which happened on last Friday and then Monday, the 61.8% retracement of that fall is 17,745. So it's possible. I would say in best case, the market gets up to that level, which is 17,745. In terms of global data, the big one was the very large miss in the U.S. services PMI number. That was a shocker. I mean, the manufacturing PMI came in okay, but the services PMI down to 44. You know, it kind of tells you that there is broad-based pressure in terms of U.S. economy as we head into the September FOMC. Initially, markets sort of went one way, and then they went the other. So initially, yields fell to lows, both the front end and 10-year, etc. Dollar weakened substantially, and stocks rallied. I mean, on expectations that, you know, the Fed will be easier now because economy is slowing very sharply. And then all of it reversed. So yields were higher, bounced back. Dollar index got to about 108, bounced off there, closed at about 108.5. Stocks, of course, also dipped from their earlier bounds. They ended flat, marginally lower, so not very large one way or the other. But I think, so that's why this is going to get sort of confusing, and we will hear from Fed Chair sort of Jerome Powell on Friday at Jackson Hole, and maybe the market will watch what he has to say closely. But even then, will we know for sure in terms of very decisively what is going to happen? Maybe we get an indication in terms of what happened in September, but this is bigger than that. There is also, of course, quantitative tightening, which sort of the pace of QT doubles from September to almost $100 billion a month. So, I mean, a lot of things are happening, a lot of moving parts, and that's why I'm saying this is perhaps a little tricky now. What would you like? Would you like financial conditions to get a little easier? But that will only happen if growth slows down quite a bit. So it's the devil of the deep blue sea, and it depends on who you ask in terms of what hurts more or what helps. So that's basically the situation we are at. It's possible the market bounces. As I said, keep in mind the 17,745 level. It's possible we get to those levels, but beyond that, I think it's anyone's guess. Sonia.
Also, it's expiry week, right? So all eyes will be on that in our own markets as well.
Yes.
And the Nifty has give and take everything been very resilient compared to all the global market pressure. For now, it's been holding. It is within that range, but holding on to the 20 DMA level. By the way, the European markets were also under quite a bit of pressure overnight, so don't lose sight of that. And the SGX Nifty is indicating a bright shade of red this morning, down almost about 70 odd points. We have lots happening on the show. We'll get an important guest in just a while from now. On the equities front, though, first up, we have some opinion coming in from Neelkanth Mishra of Credit Suisse, who says that Indian equities have risen 13% in US dollar terms since June end, outperforming global equities by 6%. He says all of it came from PE expansion ending a year of time correction. He adds the Nifty PE is back to 1 standard deviation higher than 10-year mean, and premium to the world emerging markets is at a record decadal high. As a rebound ends, he says they move to a more cautious stance. He says they like sectors that are cheap and have lower linkages to global markets and thus lower risk of earnings cuts, like financial, cement, telecom and L&T. They also like defensives like domestic pharma and staples.
Okay, some money market views coming in, and this is coming through from Kunal Sodani of Shinhan Bank, who says that the S&P Global PMI is for most major economies indicated slowing progress and even contraction. He says tepid US data helped investors book some profits, but there are no signs of a trend change. He adds oil continues to hold on to its gains on the back of production cuts, while the US 10-year yield stayed above 3%. Kunal says the dollar index can test 109.29 levels. For the dollar rupee pair, he says 79.65 to 79.7 to a dollar acts as a support, while 80.1 to a dollar is a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says that the market has started the week on a negative note on the back of a rise in global yields ahead of the Jackson Hole speech this week. He says for the week, the market will take cues from developments on Iran nuclear deal, US PCE data, Fed Chair Jerome Powell's comments in the upcoming Jackson Hole meeting, and the demand in the weekly auction. He expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.35% for the week. All right, we have lots of stock-specific action to track today.